So hello traders, welcome back to another learning video, more or less a tutorial into my trading process. So I'm trying to be more transparent with what we do, or to share the process that we use when we're trading. So today I'd promised in the previous video which I did when I was looking at I think how I made, how I lost, or how I journal my trades. I'm not sure which one, but I talked about how I prepare for my trading week. So I'm a swing trader. Basically, I take between between 0 to 3 trades. I speak of 0 as a very important number because I believe there are weeks whereby there's nothing to do in the market and you should be out of the market. And those weeks are many. They're not as few as we might think, especially for me, because I'm looking for a very, very specific thing in the market. I'm looking for my edge, for me to take a trade, and my edge only comes when 3-4 variables connect in the market. For those who have attended my course, they understand what I'm talking about. Now, as much as I'm not trading, or as much as I don't have positions, every week I must prepare, watch, and look at where markets are. In simple terms, I must flow with what markets are doing. So I don't watch markets every single hour. I watch markets every single day. I look at the opens, especially London, New York. I look at closes, especially London and New York again. So those are the main sessions that I'm trying to make money from. But like I said, I'm a swing trader. So I look at my processes on a week-to-week basis, or my trades are judged on a week-to-week basis. Ideally, I stay in a position between 1 to 3 days. I'm in and out of a position, whether a win or a loser. A maximum I'll stay in a position is 2 weeks. If the trade didn't work out this week, then I give it a chance to work out the following week. And if it doesn't work out the following week, then I exit the position and I stay out of the market. As much as I might not have a trade, or as much as I might not have a good grasp of where markets are going, I like flowing with prices. And I came up with a very beautiful process, which I've been using since 2020, called weekly technical market breakdowns. And I've also now introduced a new one called weekly fundamental market updates. So I'll share that one once I develop it more. But the weekly technical market breakdowns, the basic idea behind them is I want to have a top-down perspective of the markets that I'm trading, where they are, how they correlate with the other markets, the fundamental developments that are coming in, and what that means for the coming week. Okay, so I don't just do it to understand where prices are coming from. I also do it so that I can be able to know, moving forward, this is how I should be able to position myself in the market. And so this process has been very, very valuable in bringing consistency in my trading, and also eliminating impulsivity, or rather just taking unplanned trades, or trades which are not in your system or in your plan. So what I do is every week, so let me just open a page here for you guys to see. So I'm down to my screen. Every week, I'll write down my observations. So consider these more or less your observations of what markets are doing. And besides the observations, I have interpretations of my observations. For example, if markets are trading, have made new highs, what does that mean for me? Does that mean the trend is still strong? Does that mean we're coming to the end of a trend? Does that mean the trend is beginning? Like, what does that mean, and how do I want to position myself for the coming week if I'm going to position myself in the market? So to just look at a brief example, I can go through, for example, let me just go through a particular scenario which I like using. Let me just look at a market like gold, which I have been trading now for quite some time. And I'm going to look at specifically, not even, so what I'll do is I'll look at gold, what the value of this process on that market, then I'll look at what I was thinking through this market, then I'll be done. So I won't go through all of the weeks because there are so many, okay? So as a sample size, if you look at January week 1, 2023, this was my thought process around gold. And I want you to see how it flows all the way to me executing a trade, okay? So you can see that at this specific point, the monthly charts had opened around the fair value zone, which means the central pivot was trading around the level. I had a trend line which suggested the possibility of a third bounce and a continuation lower. And there were many variations of the trend line bounce. So if I just double click on the screenshot, you can see that's how the market looked at that specific point. So I was looking for the markets to come back higher, bounce at this point, and then start declining lower. If I move down to the weekly chart, it was a bit more clearer, unlike on the daily chart, on the monthly chart. So you can see here the level was at least more specific. It could have been easier for me to time the 19 1950 level. And then if I go down on the daily chart, you can see that I was also looking for either markets to break this R1, rally all the way to R3, or retest this R1 and come back down lower. Now, one of the things that you should pick up from here, one of the things that I'd love to pass along is, I do this not so that I can have a clear certainty around where markets are going. In fact, that's not my objective at all. My objective is to map out as many possibilities as possible of what markets are likely to do. And by that I mean what patterns are forming that I have not seen, or what patterns are developing that I have not been able to figure out. And then I can come down on the 4-hour chart, and for example, I can talk about, like this market behaving like this. And then once the week is over, I'll come and write down the weekly review. Did markets do what I expected? So for example, in this particular week, you can see markets behaved just like I expected. We had this bounce, the third one came along, rejected. We had a very good entry signal, and I should have taken that trade anticipating a move all the way to 1875. So you can see how the trade works out very well. Now, what does that mean for the second week of January? Because the first week of January, what I expected is what happened in the market. So in the second week of January, as I come along with more information. And when you see, if you observe the second week of January, you can see that now the markets had formed. Now, because it's a new week, not a new month, I won't go to the monthly chart, I'll focus on the weekly. You can see the previous week confirmed my bias that markets are likely to move higher. And so as I'm coming into this second week, I still expect some bullish momentum. However, on the daily chart, there are two probable scenarios: either a correction back for a bounce before we continue, or a break and a continuation higher. Okay, so I'm not certain which one will take place. And on the 4-hour chart, this is what I was watching. Okay, so I was watching, if we get a correction back, I would have been a buyer. However, if we get a move higher, I wouldn't be trading, because that's not part of my trading plan again. So I don't just do it to map out, where markets are going and to trade that. I do it to map out where markets are going, but I still wait for my variables, because I need an edge for me to make money consistently over and over. It's not about one trade. Okay, so if I look at it again down, you can see that this time though, markets never did what I expected direction wise, so they moved higher, but my entry levels were not attained or triggered. So you can see markets never went down where expected. Instead, we just had some consolidation and a move higher, breaking past 1875 and rallying all the way to the 1900, 1925 level. So that week I never had any position on gold. On the third week though, probably there was a position. Let's see. So on the third week, again, you can just see the system of flow that I'm using to flow with what prices are doing and what the markets are doing. So I involve that, or that is a big part of my trading process and decision making. Now you can see, if I look at the third week, you can see bullish momentum now is becoming quite strong. So it means we are now nearing my level, the one that I was anticipating. And on the daily chart, you can see gold is trading above the 1900. So the R3 was taken out, 1900 taken out. On the 4-hour chart, this is what I was watching. And I was watching for a probable correction back to 1900, a buy, and a move higher from that level. What happened? Markets came down, sunk lower to the 1900 level, rejected the level, started moving higher to R2. That becomes another winning trade, because that one now is within my working framework and my system. So that's another trade. And January week 4, I do the same process. Okay, so it's the same process being repeated over and over again, and that's how you're able to attain consistency, because I do believe that consistency of outcome only comes from consistency of process. So if you don't have a process for preparing, for example, for your trading week, for your trading day, for your trading session, then there's a high chance you don't have profits by the end of the day, because you don't have a repeatable process that you're following from a week to week, day to day, session to session basis. And so if I come to week 4, you can see clearly markets played out like we expected. So you can see we now approach this level and some weakness comes into the market, suggesting prices are now likely to start declining lower. You can see on the weekly chart, on the daily chart, we're looking for the 1950 level for potential shorts now from the level. And if I go down to the 4-hour chart, that is how it looks. And you can see clearly again another winning trade, whereby markets correct to the level and then rally all the way to the R2 level, forming another good winning trade. Now the final week is when prices reversed course, so they stopped moving higher and started moving lower. So if you look at February week 1, prices now tapped the level that we expected and they started moving higher. Okay, so on the weekly chart you can see what happened. On the daily chart you can see what happened. So let me just click on the weekly chart. So you can see a clear sign of rejection comes along. Okay, so a clear sign of rejection comes along, signaling that markets are likely to start now declining lower. So this shows me that I'm very, very in tune with what prices are doing. Like I'm in a state of flow with what markets are doing. And on the daily chart, you can see I also have this compilation. So I'm waiting for markets to start moving lower. And on the 4-hour chart, I have this. So we have bounce 1, bounce 2, bounce 3. We're anticipating a move higher to 1950. And then on the weekly review, you can see precisely what markets did. They came back lower, then rallied higher, then moved lower. But now if I go to February week 2, you'll discover that markets did precisely what we expected. The shorts that we were looking for at the 1450, at the 1950 level, I mean, were clearly attained, and markets just significantly moved lower. So gold respected the third bounce. Let me just open. You can see, and prices just started declining lower. You know, moving lower all the way from that level, sending the markets lower. Now that's just a brief introduction into the process that I use to prepare for my trading. So every weekend, I don't do it during the week when the markets are open, I do it during the weekend. I'll sit down and I'll analyze all markets that I trade. I don't just do it for gold, I do it for all markets that I trade, and I've been very, very consistent for the last 5 years. I think if I open each page, you'll realize I've never skipped a week. Other than Christmas weeks where we're on holiday, I rarely skip a week. You know, I've been trading now for some time, for around 6-7 years, around 8 actually to be precise, but I count it like real trading, the one where you're heavily immersed in the trading, around 2019, so around 5-6 years there. So if you look at all these times, so you can look at, for example, I started this process in 2020, and you can see from 2020 all the way to December I did, including, you can see copy of December, which is the Christmas week. If you just come in here, you'll see even during the Christmas week, as much as I'm not heavily in tune with market, as much as I'm not trading, I must note down what markets are doing from a technical perspective. And now I normally come back to just look at what is my strike rate, you know, how good I am I at telling a particular market is headed somewhere, which markets do I do better than others. So those are the stats that I'm tracking from these weekly technical market breakdowns, the value of alignment between multiple time frames. So there's a lot that goes on in my preparation process before I'm able to come in and say, let's say this week I'll trade this market. So once I'm done with the technical breakdowns, the next thing that I'll do is I'll look at the fundamental breakdowns. So do we have any data releases? Do we have any key speaker? Do we have any geopolitical events that are likely to affect markets? I'll run through that, okay? Once I confirm that and how it's likely to affect the markets, and the next thing I ask myself is, for the setups that I have, at what points do I think they should be executed, you know? Am I timing a specific level? Am I timing a specific session? Am I timing a specific day? Obviously, it's very hard to control markets or say markets will get to this level, but I think you can control your own behavior. You can say, I will not trade unless this happens, and that's what I think you should learn to do. So that's what we do, or that's what I personally do. So anytime whereby I have spotted a setup, then the next thing is to now just wait for the setup to come, prepare for the risk that I'm going to take on the position, and then once the trade comes, I just take it, goes through the process of journaling, which we did some time back, and then I'll do the journal review, which is the last process. So if you think about what I'm trying to share with you, I did the journaling video, which is what I do during the trade. I've done now the before, which is what I do before I start trading. I'll do for you the after, which is how do you now take all of this, you know, your outlook, what you did, your emotional mistakes, your psychological errors, combine them and learn something concrete that you can use as you move forward, so that you can make your trading more or less like a learning curve, meaning you get better every single day. So you move from one stage to another, all the way to up there when you'll be able to make money consistently. So I think I can stop there for today. I could share my link so that you guys can check out my analysis for the different markets that I trade. And if you guys are for me sharing the link and me giving you updates on what I think about markets every week, please leave a comment below and I'll make sure to think about how to implement that. So with that said, I'll catch up with you guys in the next one. If you're interested in learning how to trade professionally, feel free to reach out to us. We're at Lavington Mall, Chandarana building. Visit us and we shall surely discuss more about the financial markets. So peace out.